been over 10 years since Kenya had the last IPO. IPO stands for Initial Public Offer or Offering, as I've been informed. And I'm super excited because today, the day to date is, we're in January, the month January, the year is 2026. And in Kenya right now, there's currently an initial public offering that is happening. Class in Session is where we take a topic and we break it, we unpack it, we explain it in layman so that you watching, who doesn't understand all this financial jargon or the jargon within the conversation that we're having, can follow all the way from the beginning. We're going to unpack it slowly until where we are today. I'm excited because our guest today, you've seen her on this platform before, you've seen her many times, but you have never truly seen her in the capacity that she's coming today. I'm super excited for the conversation that we're having. Ladies and gentlemen, boys and girls, welcome to Cleaning the Airwaves. My name is Richard Njau, and this is a CTA Masterclass on IPOs. And with me, I have none other than Rina Hicks. Rina, let me first say thank you so much because you are very generous to CTA with your time. I do understand how busy you are. I do understand all the different hats that you wear. So for you to come today, I really truly feel that you're the right person to come here and have this conversation. People know you from different hats that you've been on CTA. But I don't think I've ever seen you sit on a seat with this capacity or this hat that you wear. So I want you to introduce yourself and explain why, so that I can explain to people why it is that you are the right person to be having this conversation.
Okay. Thank you, Richie, for having me and for this amazing platform that you have. It's quite an honor to be here. And so, ladies and gentlemen, my name is Rina Hicks. I'm the Chief Operations Officer at Faida Investment Bank and founder of MoneyWise. And I guess the reason I'm sitting here is because Faida Investment Bank is the lead transaction advisor for the Kenya Pipeline Company IPO. And we are leading the process of privatizing Kenya Pipeline. And Richie has very many questions around Kenya Pipeline, around IPO and what the IPO is. And so we'll be looking at that. And I'm here to break down as simply as possible so everybody, including my 15-year-old, can understand what that is. Yes.
Okay, I need to put this disclaimer. This is an education series. I am doing this so that people can have an understanding of what an IPO is and everything that surrounds the IPO. Again, I want to say this. I am not asking you to buy. I am not asking you to not buy. I am doing this so that you can, if you choose not to buy, you can be informed. If you choose to buy, you can be informed. Class in Session is exactly that. It is a classroom, a digital classroom where you get to learn. Now, you've not done justice introducing yourself.
I haven't. I have.
You are so pivotal in this. So I want to start again. Rina Hicks works for Faida Investment Bank.
Yes.
And you work for different people. I've seen you in the capacity of Oak Special Fund.
Yeah.
You are not here on that.
No.
You are not here on that.
No.
Which department do you head that this falls under?
Okay. So at Faida, I also manage and head the corporate finance department.
Corporate finance department.
Yes. And corporate finance advisory is what we do. And advisory is basically helping companies that are looking to raise capital, restructure their balance sheet. They're looking to sell their shares and they're wondering, you know, we've gotten a buyer, but we're not too sure the value they're giving us is fair. Can you give us a fairness opinion? We do due diligences, financial due diligence, to just sort of see if you're looking to buy a target company, what are some of the things we need to be aware of in terms of liabilities or anything else, some things that are in the closet that need to come out so that you can make a decision on the value or the price that you should then pay for that company. It's called corporate finance advisory. It's usually to institutions that are looking to do different things, maybe raise capital for expansion, to build factories and so on. And so we come in as the go-between to carry out those activities, whether it's valuation, pricing, advisory services around that. Also creating products, because if a company wants to raise capital, we can create commercial paper, we can create bonds, we can create issue shares. So that's what corporate finance does.
Okay. Again, I'm going to take it slow. Already I felt the mind doing this thing for some people. So, examples of under this corporate finance, what are some of the examples of things that you have done before even we get to this?
Okay.
Yeah.
So we've done very many. So let me give you a few examples. There was a merger of two banks that happened in 2019, and that was CBA and NIC Group, and they became NCBA Capital. So we were the transaction advisor around the financial advisory, doing the valuation to tell shareholders whether or not the agreed ratio that they were going to merge the companies in, and therefore then value, exchange between the two companies was fair or not. So that was the last transaction that we did. We've done all kinds of transactions, including in Ethiopia, being a consultant, helping companies or banks that want to get licensed as investment banks and guiding them through the process, the regulatory requirements, and helping them in the process of being licensed as an investment bank. We were also involved in Safaricom IPO that happened in 2008 as lead sponsoring brokers jointly with Dan Blair. We were also involved in Kenyan, which was in 2006, the IPO. We were involved as lead sponsoring brokers jointly with other brokers for Cooperative Bank IPO. We've done several capital raises, even outside of the stock market. We've advised companies like Acorn, the guys that do Kwetu. We have several clients that we do this advisory work for, either as placement agents or lead transaction advisors.
Okay, I've understood that element of corporate finance that sits under Faida Investment Bank.
Yes.
Even before now we go again to lead transaction advisor, I'm just sort of trying to paint a picture of why it is that you're so positioned. Explain to me Faida's role when it comes to the stock exchange, because this initial public offering and the Nairobi Stock Exchange are these
So let me
affiliation.
first perhaps explain the structure of what is Faida and what's an investment bank. So an investment bank is different from a commercial bank.
Okay.
A commercial bank receives deposits, takes deposits, and they also issue loans. So that's not what we do. What we do is investment banking, where we provide opportunities for people to invest their money. We have three different divisions. We have stockbroking, and stockbroking is where we help people buy and sell securities, whether those securities are shares or bonds or derivatives. So we trade on their behalf. When they give us instructions, we carry out research to guide on what our thinking is with regard to the different companies that are listed on the stock exchange. That's the stockbroking division. Then we have the corporate finance division, and the corporate finance division is the advisory that I told you about, where we advise companies around capital raising, balance sheet restructuring, fairness opinions, valuations, that's that type of stuff. And then finally, we have a collective investment scheme or global markets division, because it's a collective investment scheme division that then pools funds, it's fund management, pools funds from different investors and invests the money on their behalf. And we have traders and a whole, chunk of people that run that. So those are the three divisions. Now, our connection to the Nairobi Securities Exchange is through the brokerage. We have to be licensed as a member of the stock exchange and licensed by the Capital Markets Authority to be a stockbroker. So anybody looking to be a stockbroker to help people buy and sell shares on a stock exchange have to be licensed by the Capital Markets Authority and be a member of the stock exchange.
Okay.
Yeah.
Beautifully explained. We're going to have many questions.
Okay.
Another question, I'm still painting an introduction of who is seated here so that you can understand. Again, we're working people, and I want anybody and everybody to be able to take this journey with us, not just those who have an understanding about money and finance. How long have you been in this space of finance?
22 years.
22 years.
Yes.
So you didn't just start to go with YouTube when it came?
Before YouTube existed, we were here. Yeah.
Okay. And in what capacity have you been doing this? Have you been in, or is it just in the corporate finance, or have you dabbled in all this?
So I've worked in every single department at Faida. I've been at the reception, I've been in the back office, I think the only thing I've not done is finance, actually. I've not written checks or done any accounting, anything. But yeah, I've been in the back office. I've been a research analyst. I've been a trader on the stock exchange floor, wearing a red jacket. Yes, I have. Corporate finance. Yeah, like virtually everything.
So you have a good understanding of...
I do.
Okay. Beautiful. I've understood who is seated here, and the audience also understands the capacity with which you're seated here. Now, you don't operate in isolation. You operate under this company called Faida Investment Bank. So, what is Faida Investments Bank role in the KPC IPO?
Okay, so the Kenya Pipeline Company IPO has 3 players. Let me start with it right at the top. We have the National Treasury and Economic Planning. Then we have the Privatization Authority, and we have KPC itself. Now, Parliament, through Sessional Paper number 2 of 2025, basically said that we can now privatize and give authority for the privatization of Kenya Pipeline. And the mandate was then given to the Privatization Authority to then go ahead and look for advisors and go through the process of privatization and listing of Kenya Pipeline. Now, Faida is one of the advisors that were appointed by the Privatization Authority. They're the appointing authority to then see this IPO happen. Faida Investment Bank, our role is lead transaction advisor. That means we lead all the other advisors in the process of privatizing and making sure that we do everything that appertains to this transaction as per the Capital Markets Authority regulations. So our process began with building up or requesting the client to build up a data room, meaning we need all this data and all this information for us to be able to carry on this exercise. And we carried out due diligence. So we had a valuer, a company that then valued all the assets of Kenya Pipeline, land, pipelines, buildings, all the assets that they have. Then we also had a due diligence that was done. We had a tax due diligence expert, an organization that then worked under Faida to ensure that tax due diligence is done. Financial due diligence, operational due diligence. I know this word might not be common knowledge, but due diligence is basically checking. You're selling me your car? Let me get a mechanic to check that every single part of this car is functioning as it should. And if there's an issue, either I ask you for a lower price or I move on and buy another car. Does that make sense? So it's just opening the hood and checking that things are working as they should, and where there's an issue, we point out that issue. The process involved legal due diligence and looking at what liabilities do these guys have and what's the probability that these liabilities will come to fruition, meaning they will have to pay some kind of money, whether it's a lawsuit or a court order or anything around the legal matters. Now, when all of that was completed, we then had the reporting accountant, which was PwC, check everything.
PwC, that's a credible people.
PwC.
Auditing firm.
Yes, the auditing firm is the reporting accountant. And PwC took their time to ensure that they've checked every single thing. They went back 5 years, looked at the accounts, asked questions, checked where was this and how did this come about.
And they do this independent of you?
Completely independent of us. Completely independent of us and completely independent of those 3 institutions I mentioned. Because they have to be completely independent to make sure that they disclose everything that may be an issue on the numbers that are displayed by this company. So they then have prepared a report, which is in the information memorandum, available for all to see.
And the link to download the information memorandum is currently on the screen. You can go to that website, but then also on the comment sections, depending on where you're watching this, the link is on the screen.
So the memorandum is available for download and for reading. We also have an abridged IM, a short form version of that long one for people who are just like, I can't read 100 and, in fact, they're like 300 pages, but because of both sides, it's like 147 pages. So it's a lot of content, but it's important content because it gives disclosures on what all of us have found and what the IPO is all about. So that's PwC. They wrote a document that is called a reporting accountant's report. That is a requirement for every initial public offer. And they provide their view on the accounts, as well as provide projections for what they see for the next 1 year in terms of performance of the company that they have verified. They've also gone through Q1, quarter one performance for the company, because according to the Capital Markets Authority regulations, you cannot have accounts that are older than 4 months that have not been reviewed by an independent reporting accountant. So the legal due diligence was done by OK jointly with G&A advocates. So those are also not Faida. There are other advisors on the group. Then we have the receiving banks who are receiving the money. That's KCB, Cooperative Bank, and Stanbic. And we have the lead sponsoring brokers, Dan Blair and Francis Drummond, jointly, and co-sponsoring brokers as well. So those are all the advisors. And we are taking the lead of all the advisors and making sure things are done in an ideal fashion.
Wow. I love it. I love the overview that you have explained. I get to understand. My whole first part of this video was to make the audience understand who is seated here, to make them understand that you're seated here in the capacity of somebody who has been involved in everything that is happening to do with this initial public offering. But I want to wheel it and take it back, because there are people who don't understand. I've never heard that word IPO. And those people I don't want to leave behind. So when we come back, we're going to take it from the very beginning and ask the answer. And you're going to be answering the question, what is an IPO? We'll be back in a few. Share this one. This is information that you want every single Kenyan to know, even if it's just for educational purposes. All ages, not just those ones who are above 18. We'll be back in a few.
Once the shares are listed on the exchange, the shareholders or people who are not shareholders can buy and sell the shares. We call that the secondary market. The primary market is the IPO. Then the secondary market is on the stock exchange, where people it's like a market where you go and buy potatoes and carrots or whatever. But in this one, it's you buy and you can sell.
Hope you're enjoying this CTA Masterclass. This is a CTA Masterclass on understanding IPOs. Reena, let's take it from there. Let's wheel it back, take it from the very beginning. What then is an IPO?
Okay. So I'll keep it simple. IPO stands for Initial Public Offer. And what it means is that a company is offering its shares to the public for the very first time and has never been listed. It's probably a private company, maybe even a family business or a government-owned enterprise that wants to then allow other shareholders to come and own a piece of this company. And therefore, then they will be able to raise money either for the business or for the shareholders who have been in the business for a long time. And so initial public offer simply means it's the first time that this company is offering its shares to the general public. Yeah.
There's a lot that you've said. It's such a small word, but you've unpacked it in such a beautiful way. When we're having this conversation, I've had people say, oh, the last time there was an IPO was Safaricom. Kenya's not had an IPO since Safaricom.
No.
Or Kenya's not had an IPO. I want you to give us the facts. When you were introducing yourself, I had you mention, I was like, what? CopBank? What? When was the last IPO? And when was the Safaricom IPO? And have there been other IPOs within that time frame?
So the last IPO was actually Stanlib IREIT. I remember the Stanlib IREIT. So an IREIT is an income real estate investment trust. So that IREIT was on the October 2015.
2015.
Yeah. I think because IREIT was new, REITs generally, real estate investment trusts have generally, were at that time it was the first time we'd ever heard about it, so it was very muted. It didn't do really well. I think it did about 28, 29% uptick. The one before that was, which one? I have it here. NSE. NSE was in 2014. Before NSE was Britain, which was 2011. And then before that was Cooperative Bank, which was in 2008, towards the end of the year. And before Coop Bank was Safaricom, which was in 2008, but earlier on in the year.
Yeah. When they say, is it because Safaricom was oversubscribed that we remember it, and why are we forgetting all of these others? I heard you talk about uptake of one of them.
Yeah. So I think it's multiple things. I think, first of all, the reason that the comparison is Safaricom is because of the sheer size of KPC. So these other ones were not very big in terms of how much they were looking to raise. Safaricom was looking to raise 50 billion shillings.
50 billion?
Yeah. And it's the closest to what we're raising now. We're raising 106 billion shillings.
Has there ever been an IPO of this size in Kenya?
No, not even in the region.
Not even in the region?
No.
Okay. Again, I'm taking people along this journey because...
Region being East Africa.
Region being East Africa. Hey, I like the way Reena comes. Reena is always coming correct. Check your facts.
Yeah, I have to check my facts. I'm like,
So, another word that you keep using is listing. So, you keep using listing in reference to IPO. Why are you using the word listing?
Because there's a second process. So there's a process of selling of the shares, right? So where people subscribe for the shares, they buy the shares. But once that process ends, then the shares are listed on a stock exchange. Meaning that once the shares are listed on the exchange, the shareholders or people who are not shareholders can buy and sell the shares. We call that the secondary market. The primary market is the IPO. Then the secondary market is on the stock exchange where people it's like a market where you go and buy potatoes and carrots or whatever. But in this one, it's you buy and you can sell.
Okay.
So there's a platform that has been created by the Nairobi Securities Exchange or the London Stock Exchange, New York Stock Exchange, wherever in the world you are, where you can buy and sell securities. And those securities in this context is shares.
Okay. Now, how come in this whole mix of companies that have found their way to the Nairobi Stock Exchange, I have not heard you mention Homeboys?
Okay, because Homeboys was not an IPO. It was what we call a listing by introduction.
I don't even know what that means.
So let me break that down. So Homeboys was not looking to raise money or capital. So they didn't offer shares to the public. All they did was they said they looked at the regulations, looked at what it would take for them to list on a stock exchange and not issue their shares publicly.
Okay.
And so they then got somebody to help them apply, and they then became listed on the stock exchange. But I must mention it was listed at that time on the GEMS market, the growth enterprise market segment of the stock exchange. That segment of the market at that time had minimal requirements to list. So you needed market capitalization of 10 million shillings. You need minimum, I think, is it 10 or 20%? I think it's 15%, I'm sorry. 15% of your shares are available for people to buy. So in terms of the requirements, they're not as onerous as the main investment market segment.
Okay.
So the reason you don't hear Homeboys is, first of all, it doesn't trade. I don't even think there's ever been a trade. I don't know, maybe once.
Yeah.
It doesn't really trade at all. But these other companies are liquid in the sense that they trade and people buy and sell millions of shares daily.
So there's two ways. Again, guys, I'm taking this slowly for those who are walking the journey with us. I don't want to leave any person behind. No man left behind, or woman. So there's different ways of getting onto the Nairobi Securities Exchange, or what I can call the Nairobi Stock Exchange. Why did they change it, by the way, from stock to securities? Because
stock is shares, but now they have more than just stocks. We have indices, we have REITs, I-REITs, we have derivatives, we have bonds that trade on the stock exchange. So that's why we call them securities as opposed to stocks.
I get it. It's not just stocks. No. It's not just shares. Okay. So there are two ways then of a company listing onto the Nairobi Securities Exchange.
Yes.
And one of them, and the one we are focusing on today, is IPO, Initial Public Offering. Now, that I've understood, I'm there so far.
Yeah.
By the way, you're brilliant, Rina. We got the right person for this. So, next question is, why do companies now, what is the purpose of the company? And I want us to be specific to KPC, Kenya Pipeline Company. Why is the government looking to raise capital by selling a piece of the company, and how much of that company are they selling?
Okay. So let me just first intro by saying that different companies list for different reasons. Okay. So this is not the reason that all companies that are listed on all markets in the world, this is not necessarily their motivation. So yeah, you're right. It's government owned, and government is looking to sell their shares.
Government owned currently 100%?
Yes. It's fully owned by the Kenya government.
Okay.
Through the National Treasury. The National Treasury is the shareholder. So the reason they are selling is there's multiple reasons. The first reason is to raise money for development. Okay, they've been talking about infrastructure and all of these things that they want to do. And so there's raising funds. But the second reason that they want to sell is the government is not in the business of being in business. You understand? How can we create efficiencies in our organization? So Kenya Pipeline is not the first privatization that they have ever done or will ever do. There's actually a whole list of privatizations that the government is planning to do.
Have they done any previously before
Yes, they
this?
have. Kenya Airways, KCB, Safaricom. Right? Those are just examples. Kenya Re Insurance Corporation.
Yeah.
Those were government-owned institutions that they then decided to privatize and allow the public to come and participate and list the companies on the stock market. Okay, so those are just examples. So the third thing is a word that has been used a lot is to democratize the ownership of Kenya Pipeline, meaning that anybody, Mama Mboga, Wanjiko, Otieno, everybody, Rina, we can all own shares in this company. And that then deepens the capital markets. By deepening the capital markets, we are creating additional opportunities for the capital markets to provide an environment that then enables buyers and sellers of stocks to find opportunities to invest. But also companies that are out there that are looking for capital, they can come to the stock market or to the capital markets to raise capital because it's liquid, there's money that's flowing in and out. And capital then flows to the most productive companies, the ones that are run well and things like that. So when you have a deepened capital market, it then works for a lot of companies. And the economy then grows because you have companies that are able to raise capital. And when they raise capital, they're able to grow, to expand, they employ more people and so on. And economies then continue to develop in that way. So that's the third agenda, is to ensure that Kenyans also have the ability to participate in the progress of this company. Look at what happened to Safaricom. Safaricom under Telcom was just this small company. You know, it was a department in government. It was not this big corporation that we're seeing today. But through privatization, bringing in people like Vodacom and Kenyans and all these different investors, institutional investors that demand a certain level of accountability, the company has completely transformed to be the largest, most profitable company in East and Central Africa. We haven't seen anything like it. There's nothing like it in Ethiopia, in Congo, wherever around this area, in Rwanda, in Uganda and everywhere else. It's only here where you have a company that is that. But it was privatized. It was a public company before that was privatized. There's a lot of advantages with privatizing because the company has to become efficient. Governance is improved. Accountability is improved. Safaricom has raised money multiple times using different instruments like bonds.
Recently they had is it the green bond or something like that?
I don't think it was a green bond, but there was a bond that... I don't remember it being a green bond. You've caught me off guard there. But I don't think it was a green bond, but it was a bond that they raised, a capital that they needed to be able to do whatever it is that they're doing. Perhaps it was actually, it was an infrastructure one.
But they were able to do it.
Because it was 10.5%, 10.4% Tax-free bond, yes. Yeah. So.
This is so, I love how you are breaking down and demystifying all this. Again, there's a word you keep using, and I want you to switch to your other hat. It's called, you keep saying this word, capital markets.
Yeah.
Again, there are people who may be watching who have who that word they've heard, but they really don't know what it means. When you talk about capital markets, what are you talking about?
How do I explain this? It's basically the space where people can come and raise money for their businesses. That does not include banks. So banks lend money to us, okay? So if I'm running a kiosk and I need money to support my inventory or my stock, I will go to the bank and ask for a loan, maybe for 1 million shillings to buy all this stock. And then as I sell, I pay back the bank. Now the capital markets provides an alternative way for me to be able to raise money. How? I can raise that 1 million by offering, let's say, a commercial paper. That's an instrument similar to a treasury bill where I say, I want to issue commercial paper. Okay, 1 million is not a great example, but I want to issue a commercial paper for people to lend me money, and I promise to then pay them back after 1 year or after 9 months.
Yeah.
Once I have used it for my working capital, once I'm done, then I give you back your money. But the capital markets has different players. It has a regulator, it has investment banks, and it has institutional investors and retail investors. But the bank is just the bank and the client. So there's a whole ecosystem that forms the capital markets that then enables capital to flow easily. Well, easily, you know, and the reason I do this is because it doesn't just flow. You have to have a business that is working well, that is profitable, that will give back a return to investors, because investors are not just giving you money to just help you.
They want
a return,
yeah?
And a return that makes sense. Even governments use capital markets. So for example, they issue bonds every month. They issue bonds, they issue treasury bills, and those then help to finance their budgets. Yeah, so that's what, when I say capital markets, that's what I mean. And it's governed by the Capital Markets Authority, and we do have a Capital Markets Act in Kenya that then regulates and provides the law around which this ecosystem operates.
Okay.
Yeah.
The core reason as to why I did this episode was for people to understand what an IPO is. I feel like you have extensively explained it. We're going to take a quick break. When we come back now, we're going to focus on KPC.
Okay.
Who are these guys? What do they do? And what did you find out when you employed all those guys to look under the hood, under the bonnet, as we call it in Kenya, and figure out how this company works and whether it is actually profitable and the process of it then going to listing.
Okay.
We'll be back in a few. Again, don't be greedy. Share this one with the people who need this information. All ages, all races, locally and globally. We'll be back to continue the conversation.
So one of the requirements of the Capital Markets Authority in the process of doing an IPO is that you have to get a no objection letter from the primary regulator of the issuer being the company that's coming to IPO or to do an IPO. And so the only interaction was with Kenya Pipeline Company requesting EPRA for a no objection to proceed with this process. Yeah.
Welcome back. I hope you're enjoying the journey so far. This is a CTA Masterclass on IPOs. Okay, we've understood who's seated here. We've understood what an IPO is. And thank you, even in the process, you brought in this whole thing called Nairobi Securities Exchange. And now we even understand the destination of where this IPO is going to. My question then now comes to, who is this guy? And in the back, we've got beautiful pipelines. So who is Kenya Pipeline Company? Okay. Or is it corporation?
Yeah. So it's now going to be, or is already Kenya Pipeline Company PLC, because it has had to change its name and its status from being a private company to a public company.
So PLC stands for what?
Public Limited Company.
So anytime somebody says PLC, it is Public Limited Company.
Yes. You have to, it's the first requirement for listing. You have to be a public company.
It's why Safaricom is now called Safaricom PLC.
Right. So they're in the business of transporting and storing oil or fuel. Fuel. Let me call it fuel. So that's what they do. They are not an energy business per se. They don't produce energy. They are a logistics company in the energy space. So they provide transportation of fuel from Mombasa once it has been imported to various destinations such as Eldoret and so on. Yeah? So there's a whole pipeline network in Kenya that's about 1,342 kilometers that it transports oil through.
That about was a bit precise.
It was very precise. Okay. I used about in case I'm not right to the...
By 2 centimeters.
So that's what they do. And so they work with importers of oil, who are the oil marketers, and they also distribute to the oil marketers. They're what we call in the midstream section of the oil market. So you have the upstream. Those are the guys who now mine and explore and, you know. Then you have midstream, which is where they sit. And then we have downstream, who are the oil marketers. Now your Total, Rubis, Shell, those guys.
Yeah.
So it plays in that middle segment of just transporting and storing on their behalf.
This is brilliant. These guys, you know, when you hear that they're in, do they sit under the Ministry of Energy?
So prior to this process that we are now undergoing, they are regulated by EPRA.
And EPRA is?
Energy and Petroleum Regulatory Authority.
Okay.
Yes. So they are under the Ministry of Energy, yes. But EPRA is their regulator. And EPRA then now regulates how they operate, regulates even the tariffs, and how much then, you know, is the cost of transporting this oil.
Okay. I want to layman this because, you know, when we hear Kenya Pipeline and government, it's sound and energy, how our minds may put what they do is very different from how you're explaining it. They are logistics. They are more efficient than many trucks transporting this. They're more efficient than the SGR transporting this. But in real talk, their competitor would be SGR.
Well, I suppose
you know what I mean? Because they're in the logistics and transportation business. Basically, how do I move this oil from Mombasa to wherever it is? Where I don't know if it's, I don't know.
Say Eldoret.
Eldoret.
Okay, Sumu.
And you also said they're in storage. So once they move it, they store it before the person who's downstream comes and picks it, the Totals and the rest. I'm asking.
It's correct.
Oh.
Yeah.
So, okay. Do they do anything else?
That's a great question. So the answer
Because I mean, that sounds like they're in transportation business, that's it. I'm waiting for, I've given you 20 minutes to explain.
That's like 98% of their business.
So how they have been operating and making profits over all losses, I'm not sure, I'll come to that question, is what Kenya Pipeline does is transportation of oil.
And storage, yes. However, they are going into LPG, which is the gas, and fiber optics, meaning they will lay fiber optic cables to then supply, what are they called? USPs?
Yes, the data,
those cables, yes. They are also currently doing, this is not coming, but they are doing crude oil handling. So for those who don't know, we produce oil as a country.
Turkana?
In Turkana. So when that Turkana oil is produced, it needs to be exported to be refined. We don't have a refinery in Kenya. So it is then transported to Mombasa, and then there's a crude oil handling process, which then now they do as through KPRL, and then that's then exported. KPRL is another company that is 100% owned by Kenya Pipeline.
And KPRL are in the handling of this crude oil.
Yes.
So, this is, to demystify this, this has been a one-way system for a long time. It was from Mombasa out. It was not previously from out to Mombasa. Are you understanding what I'm saying? It was once it is imported, getting the imported oil to the different destinations within Kenya. And is it just within Kenya or also?
So the pipeline is within Kenya.
Okay.
But our pipeline is not only used by Kenyans. Actually, Kenya only forms 48% of the market. We export 52% of the oil that goes through, or the fuel that goes through the pipeline to Uganda, Rwanda, South Sudan, and Eastern DRC.
Wow.
Yeah.
So these landlocked countries, that's what a lot of them are.
Exactly.
These landlocked countries don't have a port and therefore don't have access to this oil, and they're currently not value adding onto what they're producing.
Right.
It's like what we're doing in Turkana. And it comes back to the question that I was saying. Currently, it's been a one-way system, or at least for many years, it was a one-way system where we get the oil coming in from, is it Saudi Arabia or wherever, it comes in, and then it now goes. But what I've heard you say is that there's a different thing that KPC also do. And I want you to repeat that one again. Where it is from Turkana, it's now sending it out.
Crude oil handling. Yeah.
Okay. Anything else that you think is worth us understanding when it comes to KPC and what they do?
I think one of the things that I've found as we've had conversations with potential investors is just a lack of understanding of how profitable and the potential that then this company has. So for example, in 2025 June, their revenues were 38.5 billion. Their profit before tax was 12 billion shillings. And their margins are healthy. So I think then there's just a lot, because it's government owned, you assume it's poorly run, you assume they're not professional and things like that. I mean, it's been really interesting just sort of getting to understand even the safety. ESG is seriously taken. You go to the environmental, social, and governance practices. You go to their different locations, their depots. You go to Mombasa, you go to all the different depots that they have. You realize how they take safety seriously. Every employee knows exactly what needs to do, whether there's drills that need to be done, whether there's safety things that need to be done, hats that need to be on. Like, they're very professional in how they run. The only thing that is a challenge for KPC, in my personal view, is the fact that it's government owned. Because that comes with a lot of red tape, or what we call bureaucracy. So to get approvals through the budgeting process, there's this Public Procurement Act and all these different acts that govern how finances are spent and budgeted for and all of that. That whole process, by the time they come up with a strategy and an idea to execute on something, it's a whole year before even any funds have been released. It's like, okay, we never mind, we are fine. And so things don't move. So I don't even know if I can share this, but if I get into trouble, it's fine. So they began discussions on LPG, that's liquefied petroleum gas, and how they can then get involved in that ecosystem in 2017. But it's been, the process of getting approvals and things, it just takes long.
Yeah, because it's government.
If you're a private institution, it's just board approval, funds provided. If you're raising capital, done. In a year, 2 years, 3 years, you built your infrastructure and you're good to go. But for a government institution, it's not like that. So we're in 2025, you see? Now is when they're saying, okay, we are about to begin. We are now getting ready. And so these are some of the things that will be very interesting a few years from now. Once they are privatized, that's going to move a lot faster. Fiber optic cables, the LPG, the crude oil handling, those are the areas that will expand. And the goal is to actually reduce the reliance on revenue from only the pipeline business transporting oil to from the 95 to 98% to 70, let me say 80% in the short term.
Wow, okay. Yeah. In the short term. Okay, we're going to come into that. We're going to demystify the process that you took now in the role that you sit. But I still want us to talk about this company because This sounds like a monopoly.
It is.
This sounds like not just a monopoly, but like it will be a monopoly for a while because of the infrastructure needed to lay, for example, pipelines.
Yeah.
And I ask this because of comparisons that I have seen different people make when it comes to comparing this company with this company. And we'll talk about the valuations. But I want us to understand, this sounds like it's going to be a monopoly for a while in terms of at least transportation of oil.
Yes, it is a regional monopoly. So first of all, we are transporting oil that is already refined and ready for use. Whether that's jet fuel, whether we're talking about diesel, whether we're talking about super or kerosene, right? It's ready for use. I know there's a lot of people who said, oh, but now Uganda is producing oil, blah, blah, blah. There's this pipeline that has been built. It's going to, I forget the name, but it's going to, through Tanzania and all of that. That's all great, but what is happening is that they're moving oil from Uganda out through Dar es Salaam for refining. They will still need the refined oil to go to Uganda to meet its needs. And that's where Kenya Pipeline comes in. They will still need Kenya Pipeline. The region still needs Kenya Pipeline, including Rwanda and South Sudan.
So in terms of competition, I know I'm calling it a monopoly, but honestly, then who would come in comparison when it comes to competition? So I'm trying to see the longevity of this company. Yeah,
the longevity. So let's say, and they are saying it has been said that a refinery is going to be built in Uganda. So the financing of that will need to happen. I guess they have to decide the viability of that project, but I have heard it said that 2030 is when a refinery should be completed. I don't know, this is what I've heard said, in 2030 in Uganda. Now, once that refinery is built, then they can refine their own oil. And they'll be able to, I think currently they're producing more than enough crude oil for their own consumption. So in the distant future, that would be the competition that may come. I'm also told that the kind of oil that is produced in Uganda is a heavy kind of oil. I'm probably not using the right technical term, that needs even heated pipelines to transport. And that process of building those heated type pipelines is now what's ongoing. They've been funded and all of that. And that's what's ongoing right now, to be able to export that oil then for refining. So the process of the refinery will take some time. So there's arguments around, is it 2030, is it beyond 2030? We don't know. But in the meantime, what can Kenya Pipeline do? We know, or rather the company knows that this is coming. And so how can we diversify sources of revenue so that then we're not only relying on the pipeline? Now, there's more countries than just Uganda that we're supporting. And so it's how can we then use the pipeline to do more than just the transportation of fuel, such as the fiber optic cables, such as the LPG, which is, by the way, a very interesting market as well. Somebody else has also said, what about EV, electric vehicles? That's another risk, right? What if Kenya starts using EV or becomes like Ethiopia? And Ethiopia, what Ethiopia has done is basically said, we're going to charge, I think it's half duty or even less than half duty for electric vehicles. And, it's basically, if you can get an electric vehicle in Ethiopia, you're so much better from a cost perspective for the cost of the vehicle, but also from a running perspective. And so Ethiopia is doing this shift from fuel powered cars to EV powered vehicles. Now, will Kenya get there? It will, but it's going to be a long time before we're able to get there. I think the infrastructure around EV is still a long way away. And I'm sure by that time, this infrastructure that has been built will be used for other things.
And you talked about EPRA. What's their role? What do they do? Who are they in terms of a regulation body? In terms of I want to get a better understanding of what they do in regards to Kenya Pipeline Company.
So EPRA is the Energy and Petroleum Regulatory Authority. So EPRA basically governs the whole process around distribution, not manufacturing, but what's that word? I have it here. The generation of electricity, importation of petroleum, distribution, storage, and everything, and all the activities around energy, and petroleum. So even including setting, reviewing of tariffs for electricity and also petroleum. So, I mean, every so often you will hear in the news that EPRA has now reviewed the pump prices. Right? Now the pump prices are now, so they are the ones who set those prices for petroleum and for electricity.
Okay.
But beyond that, they have to make sure that these companies, such as Kenyan, Kenya Power, Kenya Pipeline, are operating within the right standards. Okay, so there's all these regulations around how they should operate, and then the regulator that then ensures, even including safety standards and things like that, that they do it in the right way.
Okay, the same way investment companies are regulated by Capital Markets Authority, they are that for the energy space.
Exactly.
Okay, did you in this time work with them at any point? Did you have to interact with them or engage with them?
So one of the requirements of the Capital Markets Authority in the process of doing an IPO is that you have to get a no objection letter from the primary regulator of the issuer being the company that's coming to IPO or to do an IPO. And so the only interaction was with Kenya Pipeline Company requesting EPRA for a no objection to proceed with this process. Yeah.
They couldn't just IPO without this approval.
No.
Okay. The aim of this video was for you to get an understanding of Kenya Pipeline Company PLC, as we now know they're called, changing the name. So I hope that has been demystified. I hope that's become clear. I hope you understand the amount of logistical work they do, even though they fall under the Ministry of Mining. I think they should somehow also Ministry of Energy.
Yeah.
Under the Ministry of Energy, correct me. I think they should also be added into the Ministry of Transport by the sound, by what I'm hearing, they also do.
Yeah.
Okay. The core of this video was for that. We're going to come back with another episode, and in that conversation, we're now going to be hearing about the process. Remember, this class in session is about, it's a CTA masterclass on IPOs. So now we're actually going to get into then what was the process of IPOing? How did you get the valuation? What is EBIT? What is all these other jargon and words that I'm hearing? PEV, PE, ratio. In English, Rina, in English. We'll be back. Share this video with every single person. Again, I'll say, not just different age groups, below 18, all across the world. Thank you so much for watching. We'll be back in a bit.
There's a whole process, including post-IPO. We have to train the board. We have to make sure that they understand what now this corporate governance environment looks like.
The board?
Yes, of KPC. We have to handhold them for some time, as well as monitor how is the company performing, how the shares doing, ensure there's good liquidity in the market. So there's a process even post-IPO.
So this is a CTA masterclass on IPOs. I know you're excited about this episode because now this is where we get into the meat. You get to understand how the team got the valuations. You get to understand why the cost is the cost that it is. You also get to understand all these different jargon words that have been thrown. Okay, Rina, thank you so much, first and foremost, for laymaning the terminology that maybe a lot of people may not have understood, especially those who are not in the financial industry. You're taking different people, different age groups. I'm talking about a 14-year-old can understand this conversation. Anybody can understand this. So thank you.
You're welcome.
Now, you in corporate finance, heading the corporate finance team, and Faida Investment Bank, and Faida being the lead transaction advisor for the KPC IPO. See how I understand this because of how well you explained. I want you to walk us through this process. you get given this assignment, or you win the bid to do this, what then happens? How do you then begin the process?
So the process actually begins before you win the bid. So let me just put this into context.
Okay.
Because it's important to explain the kind of experts we have to have on board to get a transaction of this nature.
Okay.
So there's certain requirements that are usually in a request for proposal that is sent. So the government, through the Privatization Authority, sent a request for proposal to RFP to all these different organizations. I mean, you could apply if you want. And so when we looked at it, we said, okay, we need to line up very serious experts in all these different fields, including an energy expert, an engineer who understands, or an organization that is in engineering that understands pipelines and energy and has been in that sector for many years and understands the dynamics. You see, we're in investment banking. So that we're not doing guesswork. When we're doing a due diligence, for example, when we're doing a due diligence exercise, we have the experts that are available. So all the experts around operational due diligence, running this transaction itself as a whole, so operational due diligence, tax due diligence, financial due diligence, we've had to put together a very solid team. Then put all those CVs together and then go in as one organization with some consultants and put in a bid.
Okay.
We're together till then.
We're together.
Now,
so you didn't just go as Faida?
No. I mean, it's Faida.
No, I get what you mean. You didn't just go as Faida corporate finance team.
No.
From an investment perspective.
No, we have consultants that we added to the team.
Okay.
To beef up our corporate finance team for the period of this IPO and listing and post-IPO.
Wow.
Because it's not just getting listed. There's a whole process, including post-IPO. We have to train the board. We have to make sure that they understand what now this corporate governance environment looks like.
The board?
Yes, of KPC. We have to handhold them for some time, as well as monitor how is the company performing, how the shares doing, ensure there's good liquidity in the market. So there's a process even post-IPO, and also hand over a compliance department that understands investor relations. How will they engage investors in the future? What are investors looking for? You understand? So it's quite a process.
Yeah, because there's different requirements for a public listed company.
Absolutely.
And these guys were not public listed before,
no.
So they don't know.
Exactly, and they're continuing obligations. Let me give you one. When there's material information, even the definition of material information, they will need to understand, what does that mean? Material information is information that can substantially change the price of a company on a stock exchange. Change of a board member, change of a CEO, change of strategic direction, or you have somebody who is coming to acquire the business. Anything that is material in nature must be informed. The CMA must be informed within 24 hours of that decision being made by the board. So things like that. There's continuous obligations, including when they must issue their accounts. By when? Because it's deadlines now. It's not just, when government, no. This is now a different way of operating. So
they come, Kenya Pipeline Company previously was not under CMA.
No.
Now becoming public listed company, they also are. They're of course, EPRA is still going to be regulated by EPRA, but now they have a new guy who's coming. Okay, so
I haven't answered your question yet.
Yeah.
What's the process? So I went pre. I've talked about a little bit of post and why we had to do the pre really, really well. And now, during the process, so now we have to hold meetings. We have WhatsApp groups. We have email groups. We have to remain in communication. We have to have meetings with the Privatization Authority, with the company, with the rest of the team, so that we have a coordinated effort. You see, we're not doing everything. We have PwC on one hand that has to get something done within a certain period of time. We have to have a timetable and a Gantt chart that tracks our process to ensure that we are working in a timely fashion. The only way we can do that is a well-oiled, coordinated machine of advisors that are speaking in one voice. Now, so we began to have not just weekly meetings, more than weekly meetings, because we have to have committees that meet as well. We wanted to have this as an electronic IPO, What does that even look like from a CDSE perspective, from an NSE perspective, from a shareholder perspective, from the registrar perspective, from the banks? There has had to be integrations of systems that have to happen so that when you pay in your bank, then the registrar gets notice you've been paid. Like, it's a whole process. And so meetings.
And previously, had any IPO been done electronically?
No, it's the first one.
Wow. Okay.
It's one of the most proud things I am of the team, the entire advisory team for what we've been able to achieve.
And just to explain to somebody, when you say it's electronic, what does that mean?
It means that we're not accepting manual applications. The only exception is for qualified institutional investors that require an approval process that has to have to get several signatures and things like that. So there'll be a handful.
Yeah.
So everybody else,
but
whether you're a
retail
company,
investors, and I'm talking about, you guys throw the word retail investors.
Okay. Individual investors.
Yes. Me, Aizo, who's here behind, they know, the camera guys, the building that we are, the guys who work here, those guys are the guys you're calling retail investors.
Yes. Including high net worth.
Yeah.
They're all individuals. As long as you're an individual
I'm not
investor.
high net worth.
I didn't see you. Okay. As long as you are an individual, you're a retailer. You're a retail, not a retailer, but you're a retail investor.
Yeah.
So all retail investors and companies as well, unless you're a qualified institutional investor, you will apply on an online platform, the E-IPO platform, or for individuals, USSD, which is so easy.
Okay.
And the USSD, you just do hash, the number,
the one on the screen,
star, the number hash, and you go through a process. There are prompts, you key in your details, you key in your ID, you key in your CDS account number, and so on. And so that process has been made very, very simple. There's many lessons that we learned from the previous IPOs that we've had, and we then took those lessons and applied the learnings from those lessons to make sure that we have a smooth, seamless, very quick reconciliation process post-IPO, just to make sure that everything happens very, very quickly and well.
Okay, so you're talking about the process. I know I keep cutting you short, interjecting.
So going back to the process, so meeting weekly and even more than weekly for those who are working on different work streams, because we had parallel work streams at the same time. So we have a team going out to all the different areas where there's a pipeline, a depot, buildings, land that is owned that are doing the valuation.
Okay.
We had a team.
Again, let me slow you down. This sometimes here's where people can get lost.
Okay.
So you get these different teams.
Yes.
When you say, for example, valuation,
what
are you? Who is the team and why are you sending them out to do what?
These are expert licensed valuers who go and look at this building. How much is it worth? What's the market value? What's the first sale value? There's a whole process of valuation that land and building valuers, asset valuers, they're called asset valuers, that they go through. And they have to go and assess the land. They have to make sure titles exist, that they are not encumbered, meaning you've not taken a loan against that title, or that the title process, when you acquired that asset, was completed. Because when a piece of land does not have a title in your name, it is not yours. Even if you show me you paid for it. Do you understand my point?
I get it.
So they have to also check all of that, and then come with a value of all the assets that are owned by the business. Then now there's business valuation, which is different from asset valuation.
Yeah. So wait, Rina, you talked about this pipeline is how long?
1,342 kilometers.
That is land that it sits on?
Well, no. So there's some land that it does not own. So there's land that it owns in different parts of that pipeline. There's land that it owns even separately from the pipeline, where they have training centers and things like that. So it's where they have titles for land that they say they own, including vehicles, including,
any asset. Okay. Yeah. My mind was just doing some quick calculation and just about the amount of workload that they had to do.
No, it's a lot.
Okay.
It was a lot.
And how long have you been working on this process?
So we began on the first week of December.
What?
Yeah. That was when after being appointed, when work actually began. Yeah.
When people got on the ground and started moving.
Yes.
That's a career. Short.
We haven't slept. Did I tell you I want to go on a nice long holiday?
Okay.
It's been a long journey.
So?
But a short one as well. Intense.
asset valuation, I have got an understanding.
Okay.
Explain to people what is the reason for doing the valuation? What are you trying? What's the goal?
So when the company comes on the stock exchange, right? Or no, even before the stock exchange, when the company is selling its shares, at what price will it sell its shares? Mm-hmm. We have to understand what the value of the business is to determine pricing. So price is a function of value of a business, but also is a function of willing buyer, willing seller, supply and demand, and what are people willing to pay for that thing. So if I'm selling my car, I will go to a valuer. How much is my car worth? Then I will go on places like Gigi to check this kind of car for this year, this kind of make. How much are they selling for roughly in Nairobi? And then it could be less than my value or it could be more than my value. And then I determine my price. Yeah.
It's like when people say my net worth is this much, they take in consideration not just their salary and how much they have in cash, but even their properties, houses, and other buildings. Yeah. So when I've got an asset valuation that you are doing, the other thing that I heard you say is business valuation. Okay, explain that.
So the business valuation now looks at how has this company been performing? Fine, they have all these assets, but to what extent are these assets generating revenue for the business? And how efficient is this business? So investors, fine, you have nice assets, but I can't sell a pipeline, right? Where will I sell it? Yeah. I want to know how much revenue is this pipeline generating. So the business valuation has a very important component because it looks at revenues, it looks at the cost of those goods sold to be able to generate that revenue. It looks at the expenses, administration expenses, staff costs, all these different costs. And then we have the profit that comes after all these expenses are taken out. What is that profit? And then we have tax and all these different things. So you look at that 5 years prior, and then you also want to project in the future to see, given the strategy that this company is looking to get into, what is the likelihood that they're going to make the kind of revenues they're saying in their budgets that they're going to generate in the future? And so you do like a sense check of that in collaboration with the reporting accountant, who's also checking and making sure that the numbers are correct and so on and so forth. And then you do your projections. And so you can decide, I'm going to see from a different methodologies, whether that's free cash flow to the firm, a dividend discount model, a dividend yield model, a relative valuation model. There's different kinds of models that are used for valuation. You come up with a value based on certain assumptions of the business. So you also have, now you can decide to do what we call a sum of parts and say this is the assets and this is the business value. Yeah. That's not correct. The assets are a different valuation methodology, which then is like a net asset value. What I meant to say is they have two companies. So you would then take the valuation of one company and do a sum of parts, basically saying they add this valuation to this valuation, it gives us a total valuation of this, because you have two companies, Kenya Pipeline Company and its wholly owned subsidiary, KPRL.
Which you explained.
Yes, which I explained earlier.
Yeah. Okay, so after doing all this, what did you guys learn? So
we learned several things. We learned things around
and is
court
this
cases.
Public information?
Yes, it's in the information memorandum.
So right now somebody can go and download this document called the IM, the one you're seeing on the screen. Click on the link, go to the description, and you can follow along.
Yeah.
Or maybe even read it after. Yeah. Or throw it into ChatGPT to help you ask questions.
Yeah, tell me, should I buy this?
Okay, so what did you find out?
So there's many things we found out. There's many things we found out, including some land that has some dispute which we were not able to include in the asset valuation. But that land really belongs to KPC. But unfortunately, we were not able to add it because there's no title. Yeah. And all of this is disclosed in the IM. We found out about several court cases, some of which have already been awarded against Kenya Pipeline and NEMA, and basically some environmental. There was a leak, an oil spill that happened, and so the court awarded. But even the way that it was awarded and so on, there were issues. But we still removed the value we deducted the cost of that court case, which I think was coming to 2.8 billion shillings, from the value before. In fact, KPWC removed it as an expense. So there's certain expenses that then were deducted in 3 different years over the past 5 years that had to do with these, what we're calling contingent liabilities. Because it's like, it's probable that they might have to pay. We don't know what the amount might be. There might be an appeal, and we know that there's an appeal on some of these things. They might not pay the 2.8, they might pay less. But for now, let's take the maximum, because we don't want to then come back and say, oh, now we have to deduct this money in the future. So we were very conservative. PwC was very conservative in the way that they did their restatement of the accounts, to ensure that the accounts that are presented in the information memorandum that are being used for the basis of valuing this business are not, in fact, you'll find that the accounts show lower performance than what was reported, okay, in their accounts before. KPC's accounts have been available on their website all these years. And so if you had done the evaluation before, now you come back and see, oh, this has been removed, and therefore this is the situation. So just thought I'd say that.
Yeah.
I guess just to be transparent.
First of all, I like the fact that it shows the level of due diligence that was being done from an asset valuation perspective.
Completely independent.
That they found them. They found this court cases or this leak that had happened. And then also, PwC is a global auditing firm.
Yeah.
It's credible. The deductions that have been done.
Yeah.
I want to also hear, I like that you're sharing from a transparency perspective the negative things that have happened. What are the positives that you found?
I think the operational due diligence and the technical due diligence just revealed the level of professionalism that this organization has. And the lengths that they've gone to ensure that ESG, the environmental, social, and governance around protection, safety, precaution, just making sure their machines are working properly, and where they're not, putting in systems to make sure efficiencies are increased. It was quite impressive. What else did we find? I think they're performing fairly well. As I had said earlier, their margins are healthy, they're profitable, and they've been profitable for a long time. The government has really been benefiting a lot from the dividends that they're getting from this company. And so, yeah, I think there's just, it's a good company and it's well run. I can't wait to see what comes of Kenya Pipeline once it becomes privatized, because governance is going to improve. What does that mean? The heavy government influence that says you have to pay us a dividend of 80% of what you earn, that goes. Now that reduces to 50% as a dividend policy. And even then, a board can sit and say, we're not going to pay 50% dividend this year because we have to reinvest, or whatever it is. Perhaps 10 years from now, they change the dividend policy as an institution for the benefit of the business to be able to generate capital gains for shareholders. It just gives it more flexibility, because now you have a board that then makes a decision on what happens to this business going forward. For now, the dividend policy is changing from that huge percentage to just 50%.
So, again, I'll always, hey, Rina, you've got gems on gems. You've talked about dividends. For somebody who may not understand, who's hearing dividend for the first time, this is revenue paid, as you were saying, it had to be paid yearly.
Yes.
On the basis of the shares that the government had. And the government had 100%.
Yeah, so whatever profit you make, I need 80%, please, thanks, give it to me.
Now
you figure out how you would reinvest the 20% that's left.
So that was the policy. It was 80% of the profits that the company makes paid out to government.
Yeah.
Government is rough.
But it owns the business.
But it actually, to be honest, it owns the business. And so for somebody, explain what dividends is. I know I've sort of said it, but I'd like you to say it. Because part of owning a company, some of the benefits that come with that is dividends.
In the process of valuation, particularly in a privatization, Richie, you have to balance two things: the seller and the buyer.
So for somebody, explain what dividends is. I know I've sort of said it, but I'd like you to say it. Because part of owning a company, some of the benefits that come with that is dividends.
Yes. So Richie, let me answer your question in this way. What is a share? A share is a piece of ownership of a company. Why buy a share? There are generally two benefits. One is I can buy the share at whatever price it is. And the reason I'm buying that share is because I can see there's good growth prospects in this company. And when the company does well, more people will want to buy that share. And it's likely because of increased demand that the share price will move from that price I bought it at to a higher price. And so one of the reasons I'm buying those shares is because I can make a gain from the price moving from where it is now to where it will go in the future. That's what we call capital gains.
Okay.
The second reason...
Let's say that again in layman. You buy a share for 5 shillings.
Yes.
Because you can see, hey, these guys will do this, they'll do this. Hey, in 2 years, this 5 shillings of this company will now be 7 shillings.
Yes.
Or let me even say 10 shillings.
Yeah.
And then I can sell it at 10 shillings.
Yes.
Okay. And that's capital gains.
That's what we call capital gains.
Yes.
However, as this company is doing well, they're making profits. And different companies have different dividend policies. And dividend is the profit they decide to share with shareholders or owners of the company. So when a company makes a profit, it will decide, I'll give 30% or 50% of my profit as dividend to my owners. So that's the second benefit you have, is to receive dividends. So companies pay dividends annually. So like there are some banks that pay dividends of 14%. 14% meaning?
14% of the profit.
No. As in, if I have 10, let's say I have 100,000 shillings worth of shares in that company, they'll pay me 14%
of that 100,000 shillings.
That's the dividend yield,
A good 14K.
So I'll get 14K for my 100,000.
And I still have my 100,000. Let's be clear.
Yeah.
You still own your share.
And hopefully your 100,000 is now 103.
Yes.
Yeah? So those are the two benefits.
So what I'm hearing you say, this Kenyan the government of Kenya was like, from your profits, I want 80%.
Yeah.
So, for example, what was the profit last year? Or give me the profit that
So the profit before tax last year was about 12 billion.
80% of that 12 billion?
No, not 80. So then there's tax. Right?
Okay.
So let's call it 9B. Let's call it 9B. So 80% of that 9B then goes to the government.
As dividends.
Yes. So if they want to do anything, like capital expenditure for expenses for building another pipeline, expanding the pipeline or whatever it is, they have to then now go back to the government and ask for money if they don't have enough internally generated funds.
Okay.
So they have to go back to Treasury to ask for money.
Rina, we are still talking about the process, and all of these rabbit holes are necessary because we're learning through them.
Okay.
So you're telling me, what do companies generally do with profit? They plow it back into the business for growth.
Or they share with their owners.
Oh, yes, actually. Or
so most companies have a dividend policy. Most listed companies have a dividend policy where they say 35% of what we generate as profits goes back to shareholders. There are some who even say, we are not giving you, the shareholder, any dividends because we have so many ideas and so many things that we want to do with our business that we will give you dividend in capital gains. I remember Centum did this many years ago. And they said, for this number of years, we're not giving you a dividend. Why? The share price is going to move in a nice way. So just chill, be easy, relax. And so they reinvested the money back into the business, expansion and so on, and with the idea that then with the growth in the business, increased profitability, the share price should then go up. So different companies have different dividend policies. I
love what you're saying, because what you're also saying, which people need to be aware of, dividends is not guaranteed. It is not compulsory by the business.
No, it's a process that goes through board and shareholder approval.
AGMs. Annual general meetings.
Yes. So for example, at the AGM, it will be discussed. Company ABCD is proposing, or the board of company ABCD, because it starts with a board approval and a resolution that is made, that then goes to the annual general meeting. And the annual general meeting is a meeting of all shareholders who own this business, who then vote on the different things that are brought to the table. And one of those things is dividends. So we propose to issue a dividend of X. So shareholders may like, oh my gosh, that's so little, or no, we should not pay dividend, or whatever it is. No, okay, well, shareholders never say no. But they then vote to approve that dividend, and then the dividend is paid.
So you, as an owner in the company, even with one share, become a person in the AGM. Okay, we're still at process. By the way, I've understood business valuation, I've understood asset valuation, I've understood what it is that you were doing. What happens now when you value the business, and how much then did you value our wonderful Kenya Pipeline PLC at?
Yeah. So the number of shares that the government is issuing is 18, well, not the authorized is 18 billion shares, a little over 18 billion shares.
Did they have this before the IPO came into effect?
No, they had, okay, now I'm trying to do the math in my head. We've basically done a split of the shares for 1 to 1,000.
Okay.
I think it was 18 million or 18 million shares or 1.8 million shares. So,
Okay.
yeah, so now we've now increased the number of shares and reduced the par value from 20 shillings to 0.02 shillings per share. Why? To make the share price cheap.
Okay.
And available. So the split and the number of shares is not a function of value. It's a function of trying to make sure that the share price is we're
accessible.
Trying to do, yeah, that anybody can buy the shares.
Okay.
Now the 9 shillings with the total number of shares gives an implied value of 163 billion shillings.
Hold on, Rina. I'm alert right now, like crazy, but then I want to take you slowly. So, first things first, after the valuation, there was this amount of shares that KPC, the government had, the 100%.
Yes.
The 100%. So, this 100% may have been at a higher price. So you times the 1,000 to make it cheaper and accessible.
Yes.
Am I right when I say that?
Yes, you're right.
So then, where then does the 9 shillings come up? Because I've heard you say 9.
So 9 shillings is the price once we find the value of this business. So what did we do? We came up with a valuation methodology that using EV, which is enterprise value, divided by EBITDA, which is a multiple. So we used a comparable. We looked at, so it's called a relative valuation. We looked at different pipeline companies. So one of the difficulties that we've had is that we don't have similar businesses in the country or in the region or even in Africa. We don't
South Africa doesn't have?
There's no similar
What
business.
makes us different?
The fact that it's a monopoly, that it's a pipeline that goes where it's going. Yeah. And so we don't have that. We don't have a pipeline that replicates or is similar, that is comparable, that is listed.
Okay.
Listed. Because you have to determine the price that you're comparing it with. Okay, so we couldn't find a pipeline in Africa that is listed. We don't have one. None. This is going to be the first listed pipeline in Africa. The one that is in a developing country that was closest was India. And
that is
India
listed.
has several. Yeah, India has several pipelines.
Okay.
Not just one. So we were looking at, enterprise value, because that's the value of the whole business. And EBITDA. Now, why EBITDA?
EBITDA.
It's earnings before interest, tax, depreciation, and amortization. We needed to find so we are comparing companies. So you can have 2 identical companies that have different depreciation policies. And then when you have a company that is asset heavy and another one that is not as asset heavy, even in the same industry, how do you compare them? Because the one that is asset heavy will have depreciation charges that have 0 impact on cash flow. Because there's no cash I'm paying out. Yes, there's depreciation that goes in the expense and then I get a lower profit. But there's actually no cash going out. Am I making sense?
You're making sense, but
and
I
so
just want you to
add back so you have earnings before interest and tax.
I know this may sound
tax.
layman, but depreciation, in case somebody's wondering what that means, it's the decrease of an asset.
Yeah, so exactly. It's you have to.
If your car was worth 100,000, and next year that car will not be worth 100,000.
Yeah.
It's gone down if you don't do anything to it.
Yes. And in accounting policies, you have to expense that.
Okay, you have to have it
Reduction.
inside. Okay.
Yeah, you have to expense that. But now, have you lost cash in your bank account for the value of the car going down?
No.
You still have the asset, you're still driving it around. So because there's no cash.
I get it. I understand what you're saying.
Yeah, so I want to compare companies. So the best thing is to add back tax, add back depreciation, add back the impact of financing. Because if you have debt and I don't have debt, how do we compare the two? So the interest charge will be high for me, but that's because I'm highly leveraged, so I have a lot of debt. Whereas for you, you don't have a lot of debt, but how do we compare the two companies? So you add back depreciation, you add back amortization, and you add back interest.
What is amortization?
So it's the same as depreciation, but for intangible assets. So goodwill, for example.
Okay.
Yeah? So the EV/EBITDA multiple for listed companies. So we looked at India. We also looked at the US. When we did the average, even the median, it's like 9 or so, 9 times. Okay. So we ended up with an 8.1 times valuation, which were like, it's comparable to other companies. And when we looked at those other companies' profit margins, right? KPC's profit margins were higher. The margins were higher. They were very low leverage. These other ones have a high debt, and so on and so forth. Some of them, even the PE ratio was higher. So we're like, okay, price to earnings ratio, which is what people are using to say that perhaps it's overvalued, but I don't even want to go into that. I think the point is that price to earnings ratio is what people use as a back of the envelope calculation to see where are most companies in a certain sector or in a certain stock exchange trading at. Yeah, and therefore, is this price too high relative to these companies or low relative to these companies?
Okay.
So we like EV/EBITDA because it's a function of the enterprise value of the company, the business, and also EBITDA, which is then comparable with others after removing things that are non-cash. So anyway, that's what we chose to do. Now, in the process of valuation, particularly in a privatization, Richie, you have to balance two things: the seller and the buyer. The seller, this is a public asset. We own it. If we were selling this to Georgia, all right? If we were selling this asset to Georgia, would we sell it at the cheapest price possible? Answer me.
No, of course not.
Why not? So you want to be nice to them?
What do you mean? Like if you come and buy my thing, I give you the cheapest. I'm giving.
Yeah, lowest value, please. I want to be nice to Georgia. Would I do that?
No.
Of course not, right? Now, who are we selling to? What did I say are the objectives of this thing? We want Kenyans to participate. So do you know, we sat with GM infrastructure, GM strategy at KPC. The GM strategy told us that they had offers in writing for KPC at much higher, even 200 billion. But they chose not to go that direction, but to allow Kenyans to participate. Now, we can't give, that's very high, okay? But it's because it's a very strategic asset, as I said earlier.
I get it.
Right? So you have to also look at the fact that it's a monopoly. There's no other country in this region that has a pipeline of this nature. So there has to be some kind of a little premium you put on that, okay? And so on and so forth. So that's why somebody would be willing to pay almost 200 billion shillings for this. Anyway, back to our discussion. You also have to balance the buyer. What does the buyer want? To buy the best price possible.
I want that capital gains. I want that dividends.
Right?
Yep.
So,
and I want it immediately. Unfortunately, that's a Kenyan mentality, but I want it, not even Kenya, it's an investor mentality.
Yeah.
We want it as soon as possible.
Exactly. So we need to balance both the seller and the buyer. Give the seller a good price, but also give the buyer a good price. And we had to find a way of balancing the two interests.
Yeah.
And so because also, as we did our market sounding, it was clear that there's a huge interest in Kenya Pipeline. We also did markets out, because that's another thing you have to do. Like I said, selling a car, you can't just sell a car based on the valuation of your mechanic or the insurance company. You also want to know what is the market seeing.
Qua ground. We call it qua ground.
So when we did V2 qua ground, we're like, okay, these guys are not far off from where we are. Actually, we're speaking the same language, so we're not far off in terms of pricing. And so then we develop the price based on all those factors. And I said valuation and pricing are slightly different, because there's more. It's an art and a science, pricing, both of them actually. So anyway, so we came up with a price of 9 shillings, which we feel is affordable, and it is not grossly overvalued. It is not. It is a fair price for Kenyans to pay for Kenya Pipeline, especially given all the things that I said, the contingent liabilities that I mentioned that caused us to reduce the earnings, especially because of, those are one-offs. Do you understand what I'm saying? We're not going to have a 2.83 billion charge on the profit and loss every year. We're not. Those are one-offs. We're going to have a company that is not held back by red tape and government bureaucracy. That's going to be able to implement strategy that it has been planning and putting together for so long. A team that is going to be professionally run in a governance structure that is working for the shareholder. I mean, I can't wait. So my point is this. It is not overvalued, okay? It is a fair value for the company. And I think that's what I'll say for now.
Again, I want to make this clear. This video is for the basis of education.
Yeah. No, I'm not. Yeah.
No. I need to say this. On the basis of what you have said, somebody may feel like it's overvalued, but at least now they have the information as to why they feel like it's overvalued. The genuine information. Somebody may hear this and be like, oh, okay, I didn't know about that contingency that had been removed. I didn't know about that fiber optic cable that can bring about growth even in profitability. I didn't know about, again, I think that I read in the IM, and you can go and download, the change in governance.
Yes, that's a big one.
Yes.
So one of the things that we've done that is unprecedented is instituted within the memorandum and articles of this company that there are 2 board seats for 2 certain types of people. One of the board seats is for the Fund Managers Association, FMA, and the Fund Managers Association is comprised of, the members are basically asset managers, fund managers, okay? So people like, I'll just give you a few names. ICA, Britam, Sanlam, Old Mutual. Do those names sound familiar? Yep. Those are fund managers. Nabo Capital, those are fund managers. So they have an association and they will vote who they want to represent their interests as investors on the board of KPC.
Oh, wonderful.
Now, what does that do? Okay.
And these guys are probably going to be investors.
These are professional investors, not just investors.
No, what I mean, they are probably going to buy in.
Yes, they will. Yes. They will invest. I mean, they will invest. And so those who have invested will have an opportunity to sit on the board and formulate strategy and hold the company management to account and make them accountable and check on things and be part of the audit and risk committee and things like that. The second board seat is for a very strategic partner, and that is the oil marketing companies. So oil marketing companies, through their association, will decide who will sit on their board to represent their interests. Now, these are a major customer of Kenya Pipeline. Of course, not the only customer, but a major customer of Kenya Pipeline, because they are in the downstream. They're the marketers who sell to us.
Do you have examples?
Petroleum. Yes. Shell, Rubis, Total. Exactly. You know the names. Yeah.
So that's amazing. These are the ones who the transportation is for them, comes to them. The product that is being transported comes to them. Again, I want to walk then through this process, because this video, at the end of the day, it is about the process of getting this product, or this company, sorry, not even product, to IPO. So you then do the valuation, and then now you come up with the share price. Now, in this pricing, do you decide, what if a guy has 200 billion, as you said, and wants to buy it all? You know, I'm serious. What if this thing is also going to Uganda? If I was in Uganda, I'd probably want a lot more. It's also going to Southern Sudan. are there contingencies that have been, I mean, what's the structure like so that Richie can enter? You didn't put me in high net worth, so.
We don't have a high net worth category.
No, I'm just joking. I'm just going to say, so how does it work?
Okay. So what we've done is we have an allocation policy that creates pools for the different investor categories. So we have a pool for Kenyan retail investors, individual investors. We have a pool for Kenyan institutional investors.
Okay.
We have a pool for employees of Kenya Pipeline.
Wow.
Yes. We have a pool for oil marketing companies. We have a pool for East African community members. And we have a pool for foreign investors. So anybody who doesn't come from the East African community is considered foreign.
Wow. Okay. What is the pool for majority of the people watching this would probably, first of all, go and download the IM because it'll probably be there. But can you explain the pools there if you know them offhand?
Yeah. So we have, for the Kenyan retail investors, we have 20% allocation, meaning that they have a little over 20 billion available to be purchased.
How, the government is selling what percentage of this, of their 100%?
65.
65. So they won't be the majority. I mean, they probably will be, but 65%, that leaves them with 35.
Yes.
Okay.
Then after Kenyan retail investors, 20%, we have Kenyan institutional investors, 20%. Kenya Pipeline employees, 5%.
Wow.
Oil marketing companies, 15%. East African community members, 20%. Foreign investors, 20%. However, in the event that all the pools are oversubscribed, in the event that we have a pool, the retail pool is oversubscribed, meaning we have more people, more applications than the 20%, the retail investors, Kenyans, will get priority over foreigners.
Oh, so their 20% will reduce.
Yes.
And our 20% will increase.
Yes.
If we, as the retail investors, individuals, are oversubscribed.
Yeah.
Now, what happens if, how many shares can I buy as Richie?
Well, as many as you want. As many as you want. But if it's in a situation of an oversubscription, you will be returned, you will get a refund.
I will get a refund?
Yeah.
And what's the minimum I can buy?
100 shares.
So 100 times 9, that's 900 shillings.
Yes.
So anybody with 900 shillings can get into this.
Yes.
Second question. We'll come back to, in the last video will probably be on the question on then how do I do it?
Okay.
If I want to.
Sure.
Again, educational purposes. It's so important that I keep stressing this out.
Please do.
Class in session. This is an opportunity that is so unique that we are currently going through an IPO, and somebody that I have access to is able to come and share this. So I want to know the institutional investors and the guys like Total, what do you call them again? And Shell.
Oil marketing companies.
The oil marketing companies. It's 9 bob. Are they asking?
It's 9 bob for everyone.
It's 9 bob for everybody. Are they asking for more?
They would like more.
Okay. That's a demand and supply thing. So, my head is doing calculation. It's demand and supply. And I'm just saying, to somebody who your 9 bob is overpriced, there's somebody else who actually understands this and wants more. I'm just saying there's two different people, and I do understand both aspects. When is the deadline? Actually, right now, is it open for anybody?
It's open. We opened on the 19th of January, and it will be open until the 19th of February.
Okay.
So 19th of February we close. Okay. Once we've closed, you can't buy at 9 shillings. You have to wait for it to be listed, which will be around about the 5th of March or close around there.
Oh, that's not bad.
Now, once it's listed on the stock exchange, on the listing date, we'll have a bell ringing ceremony. We are hoping the president will be able to attend, and it'll be nice pomp and color to announce now the listing of the shares on the stock exchange. From that very day, you can sell or buy. So if you didn't buy during the IPO, you can buy then.
Yeah.
Or if you want to buy more, you can buy then in case there was an oversubscription.
Okay.
Or you can sell your shares.
Or you can sell. Okay. Let me come back. This video was about the process. So once you then figured out and came to the element of
the
price, where does this continue to?
In terms of?
In terms of where you are at right now. Because, so what happens once you decide the price?
So once you decide the price, you finish all the application process to the Capital Markets Authority.
So CMA is involved in this?
Oh, completely. Completely. They have to approve the IPO. Without their approval, we can't move because they're the regulator of the capital markets, and we're coming to the capital markets to raise money. So you put in an application, and there's all this documentation that you need, all these different no objections that you require. There's a whole list of things that is required as per the listing regulations, the public offer and listing disclosure requirements of the Capital Markets Authority. So based on those regulations, then we submit an application to the Capital Markets Authority. The Capital Markets Authority then reviews that application, comes back and asks us questions about things that are not clear, asks us to get this or the other, so there's a back and forth. And then once they're satisfied, they go to the management committee of the Capital Markets Authority. Then that goes to that's a technical committee. It then goes to the board of CMA.
Wow.
The board has to look at the IM, they have to look at all the different applications. If there's any red flags, they raise them, and then they approve. So that's a whole other process. So the CMA approved this offer on the 19th of January.
19th of January, 2026. Okay. Then now this information is made to the public, and the public can then buy if they want or decide to wait until it's listed. It's now up for all. For those who are interested in getting, I want us to come to that final video. And the video is like, okay, I want to buy. Okay. You've told me I have 900 shillings is what the minimum requirement. Do I just M-Pesa it to the air? What happens? How does it? What's this electronic thing that you created that we want to learn about? So when we come back, final video is the process of acquiring or getting into the IPO. We'll be back in a few. Again, share this video with as many people as you can. The video is for educational purposes. Get into the comments. You're allowed to give your different views on what Reena has shared. And we will be back with the final video after this.
So the first thing that you would need to do is open a CDS account. A CDS account is an account that holds the shares, and the shares sit with the Central Depository and Settlement Corporation, the CDSC.
Welcome back to the class in session, a CTA Masterclass on IPOs. And for this particular conversation, we've been using the case study of the IPO Kenya Pipeline Company PLC, publicly listed company, and we've been using that as a foundation. The
Public limited company.
Public limited company, yes. We've been using that as a foundation for us to have this conversation. Where we are at in this conversation, again, educational purposes. I'll keep saying this so that people may understand. But if you've walked this far and you're like, okay, what if I want to buy? How do I go about buying?
Okay.
This is now where we're at. Okay, I've listened to what says, I want to buy. What's the minimum amount of shares that an individual can buy?
100 shares. So the minimum you need is just 900 shillings.
Okay.
Okay.
900 shillings allows you to get your 100 shares. You cannot buy anything less than 100 shares. Okay.
Not at this stage.
Not at this stage.
When it lists, the minimum number of shares you can buy is 1 share.
Oh, for real? Oh, that's cool. That's cool to
But
know.
I would not recommend
Buying one share.
Oh my goodness, no.
And then waiting.
Yeah, like it's only 9 bob. So
No, but hey, one share is better than nothing.
yeah.
Okay. For those of you who want to buy, I've heard what you've said. I'm just like, yo, me have to get in. Let me get in.
So the first thing that you would need to do is open a CDS account. A CDS account is an account that holds the shares, and the shares sit with the Central Depository and Settlement Corporation, the CDSC. So that CDS account, and I must mention this, is different from the account that is used for bonds. If you've traded in treasury bills or bought treasury bills or treasury bonds through central bank, that's not the account I'm talking about. This is a different one. It's called a CDS account. So you will need to find a stockbroker or an investment bank or a bank that has custodian services to open an account with. So you would go to, since I'm from Faida, let me just give you an example. We have a link that we send out to our clients. And if it's okay, because I have decided to do this for free, there is a link there on the screen. Just click on that link.
Yes.
Open a CDS account. There is no cost to you doing this. We, as Faida, do not charge a fee or a maintenance fee for the account. Just go ahead and open an account.
Okay.
You will need to provide your ID or passport. You'll need to provide a picture.
Is this only for Kenyans or is this?
So anybody can open. You can be Kenyan, you can be foreign, you can be East African, doesn't matter. You can open a CDS account wherever it is that you're from.
Okay.
Okay? It's open to everybody.
Okay. For Kenyans, I want to understand, you need your ID.
Yes.
So basically, this is KYC.
It's
Know your customer.
Know your customer.
Okay. Your ID, you need your PIN.
Yes, you need your KRA PIN.
KRA PIN.
You need a bank account number. And usually what we like is either a copy of your ATM card or a copy of your statement.
Okay, so you can get your bank details.
Yes, so we can confirm the bank details. And then you also need to have a picture. So picture, ID, PIN, and bank details.
Okay.
So once you've got that, you'll upload them, because it's all electronic as well. You will upload them, and then it will go through an approval process, because we have to verify that the ID provided is correct and things like that. So there's a verification process that will happen. But within 24 hours, actually less than 24 hours, you should have your CDS account.
Okay. Let me say that again. You cannot buy into the IPO or even buy shares without a CDS account.
You cannot.
In order for you to get a CDS account, you can go to investment bankers,
Stockbrokers.
but because Rina is here and Rina works for Faida Investment Bank, if you go to the link below and click on that link or the link on the screen, or even if you call this number, can it be also via phone? No, it's easier just to that.
No, it's easy, because even if you call, that's the link you'll be given.
Or if you call, you'll be sent back to do this.
Yeah.
Okay. But what if it's a shosho who just doesn't
If it's
want
a shosho, she wants physical forms, she can call.
Okay.
And she'll be sent the forms via email or WhatsApp.
And do you have offices?
We do.
Okay.
We do.
I'm just aware that maybe some of the people watching this.
Fair enough. So we have there's two places they can go. They can either go to Windsor House.
Windsor House?
And Windsor House is in the CBD of Nairobi City, at the corner of University Way and Mwindi Bingu Street. There's a building there called Windsor House. We're on first floor. So you just go up the stairs, just one flight of stairs, and we're there. You can also come to Crawford Business Park, and Crawford Business Park is on State House Road, right opposite State House Girls High School. There's a blue glass building. We're on the ground floor, Crawford Business Park, Faida Investment Bank. With those two, then, they can come in person and fill out physical forms if that's what they prefer. Okay.
So you can either click on the link or you can go to those two premises. If you call, you'll just be sent the link or you'll be sent the two premises.
Yeah.
So save yourself that. And I'm sure a lot of people are calling also.
Yeah.
Okay. So once you go through that process and you get your CDS account, or if somebody is watching this and they already have a CDS account.
Yes.
How then do I get into the IPO?
Once you have your CDS account and you have your funds or money ready, there's two alternative processes you can use.
Funds ready?
Your money is ready in your account or in M-Pesa. No. Only either in your bank account. We moved away from cash a long time ago.
Bank account?
Bank account or M-Pesa.
Okay.
So let me start with, there are two processes. There's a USSD process, and there's also an online e-application process.
Okay.
So let me start with USSD.
Then can I do
Yeah, we can do it together.
Okay, okay.
So open your, just, so now you'll do it like you're making a phone call. You'll do star 483 star 816 hash. And then I'll click the call button.
When I click that,
what does it say?
It says Kenya Pipeline initial public offer. Number 1, read terms and conditions. Number 2, I don't have a CDS account number.
Okay.
Number 3, I have understood the terms and conditions.
Click one.
I want to read the terms and conditions.
Why not? You've not understood. You'd be lying if you do that.
So you may explain that. An SMS with the Kenyan Pipeline initial public offering has been sent to my number. The SMS has come. And the SMS says, to read Kenya Pipeline initial public offering information memorandum, open, and then there's a link. And I've clicked open URL. And a file has been downloaded on my phone, and I've opened, and voila. Hey, Rina, umefanya vitu. Oh, this is
that's the IM.
The IM document has been sent. Hey.
So it's a big one. It's important that you
but
read
at least I read
the application processes. There. So since you've read it, okay, we can go back.
We can go back to that whole process again. Okay.
Now you've read and you've understood.
I've understood.
Okay.
What you were clicking on that box, I have read. Team terms and conditions. Okay, so it was star
483 star 816
star 816
hash.
And it's important, by the way, you will need airtime to do USSDs.
Yeah.
So some of you maybe you need airtime to be able to do this. Okay. Now I have read terms and conditions were 2, I don't have a CDS account number. We've explained to you in the previous way.
But you have a CDS account number, so you can proceed.
Okay.
Now, I just need to mention something. When you click on don't have a CDS account number, which is 2, it takes you, it gives you the option of going to the CDSE website. However, you still need to see a broker. You can't open a CDS account without a broker. So in the IM, by the way, in appendix, I think it's appendix 1, we've listed all, I don't remember which appendix, maybe 4. In the appendices, we've listed all the authorized selling agents.
Okay.
So you can open an account with any of those.
Okay.
Once you've got an account with any of those, then you can now proceed with this process.
Yes.
So go ahead.
Or you can go on the link, Faida Investment
Absolutely.
Bank. And if you want to open up a CDS account from wherever it is that you're in the world, you can click on that link.
Yeah.
I will push you because you have been friendly. Come here. This is not a paid advertising. This is a star. Let me do it again.
Okay.
486.
No,
483. Sorry. Star. It's the one on the screen. 483.
Star. 816.
816 hash.
Yes.
It's been on the screen this whole time. Okay. Now we're going to click on number 3. I have understood the terms and conditions, declarations, and I have a CDS number.
Okay.
So I click on number 3. So I see different things, and this I'll share. Number 1, new application. Number 2, add shares. Number 3, make payment. Number 4, update refund bank.
Let me explain something. So you've bought shares prior, and now you're adding to the shares you bought. So let's say you bought shares on the 21st, and now you're like, you know what? I've listened to Richie's CTA, and I think I want to buy more shares. Okay, maybe you bought 100. You're like, hey, let me buy 1,000.
Yeah.
I think.
Wacha niongeze.
So you come here, you do that, and add. So that it'll add the 1,000 to your 100. The other option was, after add is, make payment.
Yeah, okay, so number 1 was new application. Number 2 was add shares. Number 3 was add payment.
Okay. So you can put in an application and opt to pay later, but you have to be careful about that, because if you forget to pay, you lose those shares. So sometimes you're like, oh my gosh, I'm expecting some money to come into my M-Pesa tomorrow. Let me go ahead and apply, then I'll come back and make payment. So that's where the make payment comes, because you've applied, now you make payment. So you just click on 3, and then you can now pay from your M-Pesa or EFT.
Yes.
Yeah.
Okay, then there's this update refund bank. how soon after will people be refunded? Let's say it's oversubscribed and you wanted 1 million shares, but you're only given 100,000.
Yeah, I think I need to check the timetable. I don't have it off head, but I think it should be that week of the 9th of March.
Of March?
Yeah.
Okay, so this will go into April and May?
No.
Okay.
Everything will be concluded in March.
Okay, I like that. And then now number 5, offer documents.
So click number 5 for offer documents.
Yes.
So those are the documents that now the IAM and all that.
Okay.
Yeah.
Okay.
Yeah.
That's fine. So for example, if I want to start a new application, we know because we took long having this conversation,
so we
I have to start the
go back.
process
I'm
again.
sorry.
So no, it's fine. It's education.
483.
483 star 816 hash. Hey, I'm even cramming it. So, and then number 3, I click 3, and then I go to new applicant. So for example, with new applicant, it says, enter the first 3 characters of your broker investment bank. So I'm under Faida.
Faida, so FAI.
FAI. So Faida because of FAI.
Yeah.
Okay. So yes, and then when I press send, it says Faida Investment Bank. Select your broker investment bank. Then it shows Faida Investment Bank LTD-B17B.
So let me say something about that. When you're selecting your broker, that means where your CDS account is domiciled or where it sits. So you could have opened your account with KCB custody, or you've opened your account with whoever. Okay, so you would then now indicate KCB as your initials, then KCB will come up.
Yeah.
Then you put in your account number, the number, without all the prefix and suffix.
Yeah.
But you have to indicate the broker where your account is.
Yeah, so you can't, if like now I'm with Faida, I can't indicate KCB.
No. So you'd put FAI because that's where your account sits. So
Yeah.
are you able to carry on?
Yes, let me quickly carry before it does that thing again. Aha. Enter your CDS account number.
Do you remember your CDS account
Ignore
number?
leading zeros.
Ignore leading zeros because there are many leading zeros.
Yes.
Yeah. So
Okay, so let's do that. I don't want guys to know, so I open it. Enter, and then it says select CDS investor category. So we've got local individuals, foreign individuals, East African individuals. So me, I would fall under local. I'm still catching wounds. Rina hasn't called me a high net worth individual.
let me tell you something. If you, sorry, I've ignored your statement. If you put yourself as East African and yet you're local, it will fail. Because it's going to, this system is integrated with the CDSE system. So you can't cheat the system. If you decide you're going to put yourself as an employee, we actually have a list of who the employees are. So it will be checked against that. If you put yourself as an oil marketing company and you're not, we're going to check against that. So you will not be able to beat the system.
Because even the next thing it asks me is enter your ID number.
Okay, so you enter your ID.
So there's still stuff that has to be given here.
Yeah.
So after I've entered my ID, it's given me my names, name Richard Kabiru Njau, enter number of shares you want to apply for. Let's say when I put the minimum, and then enter. Then it confirm details. It's given me my name, my ID, my broker investment bank, my CDS account with the whole thingy, the shares, the amount. I agree. Are you a Kenya Pipeline employee? It's actually asked me. I pressed 1 for yes or 2 for no. No. Should I press yes? Joking. Press 1 for no. Then select payment method, M-Pesa or 2 bank transfer. Let's try M-Pesa. Select M-Pesa pay bill, 1 COP, 2 KCB, 3 Stanbic. What's that now?
So those are the receiving banks. Who do you want to pay through? COP Bank, KCB, or Stanbic? You can just put the first one. Number 1.
Nah, I'm going with KCB. Okay, COP. Let's give COP. Application submitted. It's given me a serial number. Number 1, pay now via M-Pesa. So let's just try and see yes.
Yeah,
or number 2, pay later. This is actually very easy. It's told me, I think it's about to send my thing. Yes, the SDK push has come. It's decided to take And then now I just press my M-Pesa pin. Oh, I've also got a message. Let me put my M-Pesa pin. I hope you're not doing what you're doing. And that's it. And I've got an M-Pesa confirmation. I want to see if I'm going to get another message from someone else. Notification. CopBank actually has sent me a message saying we have received payment. And then also Kenya Pipeline. I've gotten another message. Kenya Pipeline. Dear Richard Njau, we confirm receipt of your payment of 900 shillings for Kenya Pipeline initial public offering. It's given me my transaction reference. Thank you for your investment. And just like that, seated here, I've been able to buy shares.
Well done.
But part of the reason as to that is because I already have a CDS account.
Yeah.
So for those of you watching, you can go to the website or you can download the IM and they'll give you the list of different brokers that offer that offer you an opportunity to get a CDS account. But because Reena is here and that I called her and that she came, and you've seen, I mean, somebody who's in Faida Investment Bank, you can click on the link and begin the process of your KYC. I have to say, this was absolutely convenient.
Isn't it? The USSD is very easy to go through.
That was, like, for Kenya, that was extremely easy to go through. So thank you so much. I can imagine if you are in a different country.
I don't know.
It's a different
I think
question.
we're on another level, basically.
Is there a website?
Yes, there is. So that's the first
Okay.
option. Option 2 is logging onto the online portal for the IPO. So we're calling it the E-IPO portal. So this portal basically shares a summary of the IPO and also gives you the opportunity to then apply.
Yeah, it's also got the countdown to close date.
It does,
Yeah.
it does. We have 21 days to go. Okay, so then...
Let me just say it,
Sure.
Even though they are seeing it. The link to go to the portal is www. The website is KPC IPO.E-offer.app. I know that sounds like a mouthful, so it's the link that you're seeing on the screen. And when you go that, you can either go, you have to go there with you can go via mobile phone, but basically an internet-enabled device.
Yes.
Yeah.
Mobile phone, tablet, computer.
Desktop, yeah.
Yeah. So once you're there, then I would recommend that you at least read the details. They have key IPO details. It has the amount we're looking to raise. It has the details on how much the government is selling. And then it also has instructions on how do you accept this offer. And it gives them both instructions. You can either use USSD or you can use So if you're using the online application process, then you can carry on and apply now. On the right side, there's a red thing that you can press, tab that you can press. You click that tab, there's terms and conditions. And those terms and conditions are in the IM, which you can download even on this very website. So you accept the terms after you have read the terms. And you can either click on new application or you can go into resume or apply. So you may have been applying, then power goes, right? If you're in Africa. Or you get distracted, a phone call comes, and then, you can resume your application.
Okay.
Or you can do a new application. So, or you can even come back and apply for additional shares, like I know you will. So next time, if you want to apply for additional shares, you don't have to do your SSD. You can actually come and do it here.
Okay, I get
because
it.
your details are in the system. So you click on new application.
Yep. I clicked on. I was already moving on to the next.
Okay.
I was adding more shares.
Okay.
But
So
new applications are just for
you go through the same process.
Yes, you go through the same process. You select the agent. As you can clearly see on the screen, this is me just doing a quick demonstration. That's that. This time I've chosen ABSA. You put in a CDS account. It's the same process.
Yeah.
Like we explained here.
So there's a difference between who your agent is or who your broker is and who your selling agent will be. So if you fill out your process.
Yeah, like now, for example, if I did agent and I did the same one, because
Faida,
that would have been for me. Yeah, there are quite a lot of agents, huh? And then the CDS number. is now you put your CDS number.
You put your CDS number.
Okay, investor
type is local individual.
Local, yes. And then now your passport and ID, your phone number, email address, and then you do a security check.
Yes.
Just to make sure.
Yes. Yeah, the security check, 8+2, right? 10, or whatever comes up for you. And then you submit. Anyway, then you put the number of shares and all of that. You don't need to verify. So the process is the same. Seamless, easy. You can pay using M-Pesa, or you can pay using an electronic funds transfer.
Yeah.
So if you're opting for an electronic funds transfer, it will give you the bank details to pay to. Once you've paid, you will come and then upload the confirmation of that payment to this system.
I get it.
Right? So that then they're able to verify that you are the applicant and that you have completed your payment. And that's it. Wow. Then you just wait for the results, which will probably be around the 4th of March.
Wow. Okay, Reena, as we come to a close, first and foremost,
5th of March, I'm sorry.
5th of March. This IPO goes live when?
It's already live.
21 days.
It's already live. It closes on the 19th of February.
19th of February. So for those who are interested, you've got until the 19th of February. But after that, it will also be listed. Yeah, you can get in still. As we come to a close, first of all, Reena, thank you so much for taking the day out for coming and sharing your experience and for revealing to people this other aspect of you that has been hidden in the background that deals with mergers and acquisitions and bringing companies to IPO. What's your parting shot? What do you have to say about IPOs happening in a country? What does that say about a country? What do you have to say in particular about this IPO happening?
Yeah, I think the thing I would say about the IPO is that this is the best time. This is the right time. And they've chosen a really great time to come to the stock exchange. Why? Because we've seen interest rates come down. And when interest rates come down, investors move to equities markets. It's a phenomenon that happens anywhere in the world you are. So you find that the returns that you get on bonds is not as great as it was. 2024, we were able to get 18.4% on an infrastructure bond. Ooh. Now, you're looking at those sort of bonds giving you 12.9, 13%. Still quite attractive, but not as high as they were before. So when interest rates come down, the stock market goes up. We've seen the stock market in Kenya go up by about 55% from 2020, year to date, basically, about 55% growth, which is exciting. A lot more people have come to the stock exchange. We're opening a lot of CDS accounts, not just for the IPO. In fact, before the IPO came, there's just been an influx of retail investors into the stock exchange, which is very encouraging for us. And what does that say about the economy? It means that it is creating an environment that then enables businesses to get capital for expansion a lot easier. And when a capital market is functioning well, it means that capital then flows to the right places because investors want to make sure that they invest in companies that are sound. And so it also pushes people to make sure that they're running businesses that are well run and are operating well and that they're profitable, paying their taxes and so on. And so overall, it helps to create an environment that creates more jobs, an environment where an economy is doing much better. And so when the capital markets does well, there's a ripple effect to the rest of the economy. And so people should engage knowing that they're making a difference, not just for the government, but for themselves and businesses that exist in this part of the world. And so I'm hoping we will see a lot more issuers coming to the stock exchange, whether it is to issue a bond, and a REIT. I know we have some REITs coming. There's a lot of excitement that's happening in the capital markets actually, and so it's going to be an interesting year going ahead. And all I'd say is plug in, take time to understand, because ignorance is not bliss. It is not.
I love it. Ignorance is not bliss. For me, I've got two people to thank. First and foremost, I need to thank you because, you've definitely come to share. As you clearly said, you haven't paid us, but us, we're in the game of giving value for value. What I mean, we're in the game of capturing the value, and because I have access to you, I remember being in your office and being like, my God, what on earth is this you do? I spent a day with you and I was just like seeing you on phone calls and I was like, Reena, please, can you just come in front of a camera and just share this information with people just for the sake of the information as itself going out. So thank you so much. If you guys are looking for a broker company Faida Investment Bank is where you can get your CDS account. I'm going to keep pushing because Reena came here with the right post in the heart. Lastly, I'm going to thank somebody who a lot of people wouldn't have expected me to thank, and that's the president of this nation. One of the things that he did when he came, I remember him coming and saying about taking companies to the stock exchange. I remember even him one day going to the exchange, and I was just like, this guy, why is he doing this? I didn't have understanding when I saw him do that. But now seeing that promise be delivered, a lot of times we're always criticizing the president. I think it's proper, and you need to say, good job done when a job is being done. So mine is to His Excellency William Samoei Ruto. Asante sana for what it is that you've done and a promise that you have kept in terms of privatization of, I don't know, was this a parastatal or was it a company? Anyway, the privatization of that. And to you who's watching, I hope this information has been of help to you. This class and session is strictly about that. Keeping you more informed and getting you better informed on certain topics. This has been a class and session. Aizo and Deno behind the camera. Thank you. This wouldn't have been possible without you and Rewa, who's also in the building. God bless each and every one of you. And for those of you who are going to be investing and getting to the IPO, happy investing. Let's see how this goes. Let's keep the conversation going. Yeah. Let's bring Reena here to ask us later other questions about this, analyzing a year after. You never know. I love this. Well done to everybody who's been involved in this. Actually, you've not just you.
There's a whole team.
You're not there. You know, there's not an I. There's only Michael Jordan said something very funny. I need to tell you this. He was like, somebody came and told him, there's no I in team, Michael. No. And he said, yeah, but there's one in win.
So no. In fact, our team has been led by Dr. Ken Belgrade from Faida. And then we have the PwC team that have done a fantastic job. We have the lead sponsoring brokers and co-sponsoring brokers, Diane Blair and Francis Drummond. We have the banks that we just read out, KCB, that are receiving banks, KCB, Coop Bank, Stanbic. We have the image registrars. Image registrars are actually behind this E-IPO system, so they need a big hand clap. Image registrars are the registrars that are processing the applications and making sure that they're reconciling and make sure everything is okay. We also thank the CDSC for allowing us to integrate with their system so that then we're able to do this E-IPO system. And of course, our digital marketing guys, our PR people, that's Belva Digital and APN, who are helping with PR and marketing. Of course, the Privatization Authority that has made this possible for us. I hope the lawyers, we have OK Law, very important people, OK Law and GNA advocates that have also helped to put this transaction together. So we are quite a big team that has helped to bring this together. We would not have been able to get to where we are without all these different companies that are solid and that have pulled their weight in this process. Yeah.
Thank you to each and every single one of them who has been involved. ... In case your name was forgotten, this was off the cuff. God bless you and thank you for watching. Happy investing.
Thank you, Richie.